And who'd have thought Qantas, the best performing stock on the market? Let's bring in here Steve Johnson, Chief Investment Manager at Forager Funds Management. Steve, I'm going to take you through some of Alan Joyce's comments today, but this is one hell of a turnaround story, isn't it?
It sure is, Ross. I'm sure people that have booked a ticket recently won't be that surprised because ticket prices are high and everyone's complaining about it, but you're seeing that flow through to Qantas's financial results here in a fairly substantial and meaningful way.
So the one thing is the company, which last year we look back at the full year loss, $1.86 billion was the pre-tax loss. But they're saying in the first half, just the first half alone, the profit is between $1.2 and $1.3 billion. So here's a little of what Alan Joyce just had to say about that turnaround today.
For a company that was 11 weeks from going bankrupt, a company that suffered $7 billion in losses over the last 2 years, it's a remarkable turnaround, and it's fantastic that we can share the benefits with our employees, with our customers, and with our shareholders. And that's what a profitable company can afford to do.
So, Steve, the other side of this is as Qantas goes back to profit, unlike most other airlines which are still hemorrhaging money, it's been able to pay down enormous amounts of debt. That makes it stronger for the long term. But, of course, as you say, there are customers out there who aren't happy simply because the price of airfares have gone so high.
Yeah, this is a global phenomenon in terms of airline profitability. You are seeing a lot of airline companies recover quite rapidly around the world, and because we have a global shortage of capacity, nobody has been ordering or buying planes for the past few years. So you've got this confluence of rapidly increasing demand and not enough planes to carry people around. So you're seeing airlines with really high capacity factors, so that the seats are full, the prices are high, and in a really low margin business, you see those higher prices translate through to dramatically higher profits. You need to be careful about the net debt with a business like this because everyone pays them for their tickets up front. So as the business grows really quickly, they have all of this cash come onto the balance sheet for fares that they haven't yet done the service on. So you see that cash amount go up, but you also see an unearned revenue on the other side of the balance sheet that is offsetting that to a significant degree. But look, to put today's announcement into context, they're saying $1.3 billion of profit for the first half. I think the second half is almost certain to be better. So you may be looking at $3 billion of profit for the year here, and the whole company has a market capitalisation of $10 billion. So I've likened it to something like the coal stocks in 2022, that in 2023 you might get something like 30% of your market capitalisation back here in profitability. And it's going to be really interesting to see over the next few days as analysts process that, put it into their 23 and 24 numbers, whether the share price can hold these gains and indeed potentially continue to higher levels from here.
Yeah, well, it's going to be interesting, Steve, because let's again go to Alan Joyce today, talking about that second half, because they gave no guidance for the second half, only for the first half.
So we have announced today that we're going to have 1 million seats on a mega sale, starting with $35 on Jetstar and $99 on Qantas and Qantas Link. So those airfares will still have very high levels of promotions in the market. Our intent is to continue with that. And even on international, you know, we look at what we're selling at the moment, and 50% of our economy class customers have paid less than $2,500 for travel to London, $2,000 for travel to LA, $1,250 from travel to Singapore, $1,000 less for travel to Auckland. So there's still a lot of airfares out there that are very cheap.
So that's the deal, Steve, about how they try and get the confidence of travellers back into the airline with the cheap seats. But effectively, he says, as more capacity comes online, especially in that second half, they're certainly going to have more volume going through, more aircraft flying, but they're also then going to potentially see that the yield that they're getting, the prices they're getting, will start to drift off.
Ross, this is the most pure economics business that you can ever imagine. You can bet your bottom dollar that they have all of the algorithms running to work out how to maximise profit over that period. And there was another sentence in today's announcement about capacity for this 6-month period that we're in actually being lower than they had guided to before, but profit being much higher because they're getting higher prices. I think they will manage that very, very carefully and closely into the second half of the year. And I think anyone that's trying to book a ticket at a peak time or to a peak destination is probably aware that these promotional fares are not easy to get if you want to travel outside off-peak hours or inside school holidays, It's a capacity-constrained network out there, and I think you can expect prices to stay high on average here for some time yet. I think at least 12 to 18 months until enough new capacity comes into the market to meet the demand out there.
It's going to be interesting to watch. It's Steve Johnson from Forager Funds Management. Good to chat to you today on the program. I think he's quite right about those airfares as well.